Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me on the desk this afternoon, we have Maddie Radner, director on Nasdaq's Market Intelligence Desk. We're also going to bring in Max Cabasso, managing director on Nasdaq's Market Intelligence Desk, for a read on the charts this afternoon. Maddie, it's great to have you with us. Welcome back to Trade Talks. And I feel like these holiday weeks, they're always very interesting when it comes to trade, certainly with Fed commentary, and we're seeing the market's reaction to it.
Yes, thanks for having me back. It has definitely been an interesting holiday shortened week so far. On Tuesday, we heard Fed's Waller's commentary. Basically, it was a little bit more hawkish than expected. He was advising policymakers not to rush into the expected rate cuts that we were all expecting in 2024.
Well, it's interesting. What seems to be good for the economy, data points look good. Fed thinks the economy is, doing relatively well. Consumers performing well. Labor market is still staying strong, but the market is interpreting it a very different way. We saw all markets move up into the end of the year. Perhaps it was overshot a bit. I mean, I personally think 6 rate cuts in 2024 is a bit aggressive.
Yes, I agree. I think the market is now pricing in still 6, but the timing has changed a little bit. A few weeks ago, chances of a rate cut in March were about 80%. Now they're around 50%. As you mentioned, economic data has continued to be really resilient. Yesterday, we saw a really strong consumer spending data point come out. It really showed that over the holiday season last year, consumers continued to spend. So the strong data and recent hawkish Fed commentary are really driving a little bit more uncertainty as we head into 2024.
And what are your thoughts about earnings? I mean, we're really not at the point of the earnings season where we can discern trends. I mean, really just the big banks have come out so far.
Yeah, so we are still in the early stages of the earnings season. In recent weeks, analysts have revised earnings estimates downward by a larger margin for Q4. The number and percentage of S&P 500 companies issuing negative guidance in Q4 is unfortunately above historical averages as well. As you mentioned, we've really only seen banks and some of our larger financial institutions issue earnings releases this year, or this week. There were actually 41 companies in the S&P 500 expected to issue earnings releases. 26 of those companies are in the financials section. So we are seeing financials heavy week. A couple of the larger financial institutions did have a miss on revenue. That said, they're a little bit more optimistic on 2024. So we are highlighting the optimism that some of these banks are heading into the new year with.
Yeah, I mean, so surprised to see that investment banking revenue, I think you pointed out here, is the worst since 2012. We'll talk about the M&A environment in just a moment, but I want to bring Max in. Again, Max Cabasso, managing director on Nasdaq's Market Intelligence Desk, for a read on the charts. Max, it's great to have you with us as always. Let's pull up a chart in the S&P 500 for an overview of technical levels to watch.
Sure, here we go. So we're in a tight spot here. We're really looking back at what the all-time highs were, just above 4,800. We've been testing it. We prodded it at the end of the year. We didn't get there. Again, we gave it another run to start off the year after we kind of sold off in the beginning. We're holding in there again. So again, just above 4,800 all-time highs. Obviously, we hit those 52-week highs recently, but that's our key level here is 4,800. Now, again, earnings are going to play a big part into whether or not we can actually get there and get through that. If not, the downside looks to be about 4,600. Again, that was kind of where we peaked back in August of 23 before selling off, and then we rallied up there end of the year. And then obviously you could see as we broke through it, at the end of mid-December, we really took off. So again, if we get through 4,800, which is the all-time highs we've seen in the S&P, wouldn't be surprised to see it take off. But again, we've been bumping into it and haven't been able to break through it yet. Earnings are going to play have a big say whether we get there. And again, if we don't, I wouldn't be shocked to see us come down. And again, look to test 4,600 for some support there.
All right, and Max, I want to take a look at Bitcoin as well. You and I discussed it frequently on the desk. Clearly, the big news was the ETF approval. Now that we have spot Bitcoin ETFs arriving in the U.S., I thought it was interesting. It didn't shoot to the upside. The selling was relatively orderly, which I think is something you might want to see in a maturing asset class such as this versus an extreme move to one way or the other, but rather have it a little bit orderly. What are the key levels that you're looking at now?
Yeah, so we had talked about it a few weeks ago before the approvals. Are we going to see that run up, or is it going to be a sell the news type event? We kind of anticipated it would be a sell the news type event. right away, we saw actually it pop a bit, and then almost immediately after, we really started to sell off. We haven't been able to get above, this key just under 48,000 level. We sold off there, and now again coming back. 42 was a level to watch, but I think 40,000, is more of a psychological, level to watch. That's going to be a big one to hold. There's a pretty decent sized gap if we fall below 40,000. Back down, 31-ish, 31.5. We really took off here. When the rumors of the ETF approval started to pick up here in October, we really shot higher. So again, we weren't able to break through here. This 48,000. 50 will obviously be a big one if we get there. Again, just kind of key whole numbers. It's really psychological, but I'm really going to be watching 40,000 if this selling picks up. Volume has been incredible, for the ETFs. I forget where the stat was, but it was something about the number of ETFs last year, the total flows that they had the entire year versus the first week, first few days of the Bitcoin ETFs. Bitcoin ETFs absolutely dominated it. We're going to start to shake out and see kind of who takes the lion's share. There's been some kind of technical pressures with what's coming, from GBTC, the trust into the ETF, so to avoid some fees. So there's been a little extra selling pressure, but again, it has been orderly. I mean, look, Bitcoin is a volatile asset, so you see these pretty wide ranges here. I'm really watching 40,000 though. If 40,000 doesn't hold, I think it could get pretty rocky. If it does, again, we could then retest this 48,000, 50,000. But again, I think I wouldn't be surprised to see the selling pick up. And again, 40,000, in my opinion, is going to be a really important one to hold if we do test it, because if it doesn't, we got a long way to go before we find additional support.
All right, Max, appreciate the insight as always. Thanks for joining us on the show this afternoon. Maddie, let's switch gears, talk about small caps for a moment here. This is your lane on the market intelligence desk. How have they performed to start 2024? How are they thinking about their balance sheets and the impact of interest rates?
So last year in 2023, small caps saw a really impressive rally heading into the end of the year. The Russell 2000 and the Russell Microcap are both up over 20% in the final couple months of the year. So far this year, we're seeing a little bit of a pullback in both of those indices. Both are down about 6% year to date, which does make sense given the shift in certainty of rate cuts that will maybe come a little bit later than expected. So these smaller caps are digesting that cuts might be a little bit more down the line than anticipated. They're working on reevaluating some of the cash that they have on hand, if any, and how they might fund their businesses for a little bit longer than anticipated.
Yeah, let's talk about M&A for a moment here. And you have notes from JP Morgan Healthcare Conference, and you also pointed out that investment banking activity revenue was the lowest since 2012. The JP Morgan Healthcare Conference is always interesting. You always hear about deal announcements, M&A. Did you hear a lot about deals this year at the conference?
Yep, so we did closely take a look at some of the JP Morgan deals that came out of the conference. Unfortunately, there weren't as many deals announced within the small mid-cap biotech space, which was highly anticipated. The largest M&A deal was actually in medtech. But that being said, there was a lot of talk about optimism heading into 2024, M&A picking up, IPOs picking up, and with that expectation that access to capital will be a little bit easier in 2024.
Feels as if we're in a waiting period here.
Yes.
Between geopolitics, we have an election in the US, have an election in the UK. We're dealing, potentially with supply chain issues, with what's happening with key shipping routes. Is that the sense that you're getting on the desk? We're waiting again?
Yep, I think we're in a waiting period. All eyes are all on the different moving pieces that you mentioned, geopolitical tension, upcoming election, and continued earnings that we're really diving into in the next few weeks.
All right, Maddie, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.